Alrighty, folks, we're back again. Today, we're going to adjust our position a little bit. The market has pumped a little bit. If we go in and look at it at a chart, you can see for the last several 30-minute sessions here, it has been nothing but basically flat to down. We had a downward pinch there for a few days, and then we literally the last few days have just been sitting sideways. So finally, we're getting a little bit of movement. In the previous video, I assumed the downward trend was over with for the near term and had taken some profit, which was a good thing. So now we need to adjust this position, or we should adjust this position, since we are sitting in a negative profit and loss situation. It's not the optimal time to take a trade right now. And that's where, if we automate this later on, we could look for things like this because if you think about and if you understand how perps.com works, this 8 hour funding rate here is sort of the key to at least one way of leveraging the synthetic market that has been created here. So, what that means in reality is the Ethereum market right now is trading at lower since it's negative, so it's lowered the index price. So if we were able to go match it up on like um, a spot network price or look at like a Chainlink Oracle average price, this current price is lower than the actual spot price of Ethereum. So that's why the funding rate right now is negative, and that means the shorts are going to pay the longs to get the price back in check with the market. And so, what we could typically wait for here, or what we should have hit maybe a little earlier, before it looks like a couple big, yeah, see a big long or a big short just came in, but then a couple big longs. Here we go, yeah. So there's some nice size coming back in. So if you think about it, one way to leverage the differences, since we're short and we're looking to stay short in this trade, um, it would be beneficial if we were to take another short trade when the funding rate goes positive. So if we were sitting at a very high positive number, or even just a barely high positive number, that would then mean the price of perp is higher than the actual spot price. And if we were looking to get short, that would give us a little bit more of a benefit. So, like I said, later on, we can automate this and we could watch for opportune times to make these adjustments when we, cross certain thresholds or during certain, number of days. Maybe let's say if we haven't adjusted the position and it's been a day or so, let's then start watching for the funding rate to come into our favor, and then we can automatically emit a transaction to balance this. And so that comes in the future when we get a contract and some bots running this thing. But for now, we have to kind of manage this on our own, and that just kind of goes by human time and when it works and when it doesn't work for us making that decision. But now that I see some longs coming in here, I may just kind of ramble on for another minute or three to see because the that was a pretty hard push in the market, and now people are taking profits. So if we zoom down into even smaller time frame, yeah, so we've now been sort of topping and kind of gathering up, coiling up energy to go higher. Yeah, see now someone's just shorted it here. And then if you were paying attention, this it affected that number up top. Every transaction is going to adjust that price a little bit and adjust that funding rate. Because then if we flip over to the actual funding rate chart, and then so you can see for the last several 1 hour rate periods, we've been mostly negative, but there was a little spike up right there. If we'd have caught that and we were looking to readjust our position at that point, that would have given us a tiny bit, not a whole lot. That would have given us there a tiny bit of of benefit. Yeah, see, like if we'd have caught that, that would have just been a tiny bit of extra, price differential, extra breakage that we could make is what that would be, folks. So, um, yeah, so now we're getting a couple shorts going. So let's go in and add a little bit more. And then typically what I like to do is I'm running a little hard on the margin ratio. I like to keep this up closer to 50 as possible, but um, again, being human, I have biases and all this stuff. I'm expecting this to be a run up, and we're going to have another rug pull moment eventually here in this market. And I know we're not going to get anywhere near $1,600 of liquidation, so let's throw a little bit more at this. But typically, what I like to do is when I do add in, when I'm in the negative like this, I like to add right around the same amount that I've done before, if not even a little more, to really push that dollar cost averaging in, um, as make the math work for us. Yeah, so there's another short, so we better get in here fast here. So we're doing 173. Let's do like 185 and see where that lets us. And what I may end up doing is sending just a little bit more Ethereum over. So if we do get another push, that'll just push our index, our liquidation price even higher. So we'll do the clicky click through here through the MetaMask. So we're on basis trades on Optimism. Could always verify that, folks. And boom, so it made a rather nice little jump there. And so now when we get the rollover that I'm expecting, we may end up pushing a little higher because if we do come out to a daily chart, I was noticing earlier when I was looking at charts, we do have a little bit higher we could come, but I'm expecting this channel to be a very wide channel, sort of like even wider than this because this was what, so 15 to, yeah, so that was almost a month there, folks. So July 14th to June 14th, and this is September 18th to October 20th. Yeah, well, we're kind of getting in that same time period potentially for a breakout. But again, I'm not positive on this market. I'm very much negative on the overall bias of this market, folks. So let's go in and take a look at the history and reload this. And in aggregate, yep. So see, even though we're short, in aggregate, we're still been paying funding payments here um, over these last few days, which is the name of the game. That's kind of how it is. It'd be great if I could receive and be short all the time, but that's not the market we're in today, folks. And then we'll come over and look at the providing liquidity. So this is giving us our iron condor effective, effective, effectively. And you can see at this point we are high on the impermanent loss side of things because we are above our entry point when we started this. We were somewhere in the middle. So now we're effectively holding a half a ETH, a little over half of an ETH short in this market. But this is again an impermanency, and as long as we expect the market to come back down, which I fully do, we can still just continue racking up these fees here, and then potentially when the market does come back to our mark, and we get a lower increment loss, we could exit some of the liquidity and then maybe make a newer liquidity that cuts this range in half. So like we could take another liquidity and start it at maybe 13 something and run it up to 15 so we can have a layered liquidity there so that if we don't get enough of another very far downturn and we do get a rally up, we can then at that point remove this liquidity and run on the second liquidity. So we'll get into that potentially later, because I may need a little more funds moved over here to facilitate that, especially if we do get a more of a market upside here. But for the moment, we're just collecting 85% APR uh, on the returns, which is incredible if you ask me. Um, and then this is not necessarily dependent. I mean, the 31% of it is dependent on your perp and OP tokens. But I like the fact that I'm literally making money with my own money here. Um, and perp.com gives us the additional leverage to make these things make sense in a dollars and cents perspective. So that's where we're at today, folks. We're sitting at a net value of $366. We do have 66 more dollars of free collateral. I would prefer not to use most of that because we are sitting a little higher than I like in the leverage and a little lower than I like in the margin ratio. Like I said, I don't like to get too far into the 50s, much less 27 like I am right now. But we are working with a little bit of limited funds in this account. So what I may end up doing is, like I said, move a little bit more Ethereum over here just to have it as a okay, we're gonna sleep well buffer if you. But I know for a fact we're not gonna get anywhere near that $1,600 in the next 24, 48, even week. So, alrighty, folks, I am going to get on out of here. Got this position managed, and we're just gonna let it keep making money for us because that's what we do. That's what we do. Oh yeah, see a bunch of more shorts. Oh yeah, look at all the shorts that just come in. So yeah, we got in at a good time, I think, because the shorts are now stacking up, and you can see we're kind of at the high end of our of this range with just maybe a little bit more to go if the bulls get motivated. But I don't think they're gonna have the steam because when the stock market's open tomorrow, I anticipate a pretty red day, and so we'll see if my predictions come true. And I will catch you in that next video, folks.